right, we had blowout earnings from Amazon, from Apple. They had a 4-to-1 split. Tech companies, as you and I have spoken before, will probably be around and making money for the foreseeable future. But now with the coronavirus spiking, the stay-at-home stocks, as they call them now, Amazon, Netflix, Apple, they'll do pretty well under these circumstances. But the reason the market's down, and you're 100% right, Jackie, usually the techs can lead the market up. But some of the bigger industrials like CAT and some of the major oil companies have taken hits today. Chevron, a major oil supplier, lost $6 billion last quarter. It's amazing because no demand. People aren't driving. So those things are weighing on the market, and they outpace the techs. But also, we knew the tech earnings were going to be good because we're still staying home. You know, they're looking back, those earnings. But the problem is, there's an old adage, buy on the rumor, sell on the news. So a lot of them we were buying on the rumor. You and I have spoken about this a couple of weeks ago, where we thought the techs would do good again and keep doing good. And I think you're seeing people now selling. It's coming to the end of the month. They're going to lock in profits, and we'll see that. And we saw that today. We saw a lot of selling going on overall, but also there was some selling in the techs, even though the news was good. And then we had very poor consumer confidence, consumer sentiment, all that, because remember, this economy is powered by consumer spending. 70% of this is consumer spending, powered by it. And you see those numbers, especially with the retailers. Again, no real surprise. That's why the market's not down 1,000 points. We were down a little over 100, then we're bouncing back in that 3-digit downward spiral. But as for now, there was no surprise. We knew the techs would do well, and we knew the retailers basically were doing poorly, except for a few, like Home Depot, I think, will do better in the long run. But basically, they're doing pretty poor because people aren't, where they're going is Amazon, which is up 65% for the year. So, I mean, that's where people are going. Online shopping, they're not going out for the most part. But if you look at gold today, for instance, gold's over $2,000 an ounce, first time ever. All right, people are going still to safe havens. If you look at the 10-year, that's I'm afraid it might go negative at some point. But it's all on the coronavirus. I mean, they told us earlier in the spring that the summer you'd see the coronavirus back off. You'd see it dissipate a little. In fact, we saw in California 1,000 new cases or 10,000 new cases yesterday. In Florida, rather, 10,000 new cases yesterday. And it's hot down there. So what's going to happen in the fall in other states where it gets colder faster? So that's what's worrying consumers, that this virus is not going away at all. And the only good, though, if you had to say good thing, the only good thing is there's less deaths. So I think Americans, and probably the world, are getting used to the coronavirus, and we are distancing ourselves from other people. We're wearing masks, and now they say we should wear goggles to be 100% sure. So you're seeing that, even though the cases are here because we're doing a lot more testing, but the death rate is going down because we're getting smarter. We're not hanging in bars. Young people aren't hanging in bars, getting the virus, becoming asymptomatic and going home to their parents or whatever. So it's going to be with us, but maybe we get a better handle on it. Right now, gold is top of the class right now. It's the best. It's the best place to put your money, basically. It's had a great run. I think it's going to go higher. I was predicting 2,000 an ounce, but like you, I figured it would be probably January, February. But people now, because of social media, because of people like you, are really on top of what's going on. And there is an election here in November. I think you've heard about that. There is an election here in November, and that has people worried one way or another what's going to happen there. So overall, I think people are preempting right now, and they're saying, okay, let me take some money out of the market, which we're seeing, and put it in gold. It's a safe haven, and now there's some really safe gold vehicles you can put in. But we're so on top of the news now, and we know we have to look forward. Where when I first started here, you'd look forward, be looking like Friday or Monday. Now people know what's going on, and they're really taking care of their finances a lot better in situations like this. And I agree with you. I think the dollar will crash. I mean, I think the pendulum has swung so much, it's going to be tough to come back. We've given out more money. Congress is now, and the Senate are talking about giving out more money this quarter. I don't know why. We can't keep doing this. It's horrible when you think about it. We just don't have the money to get out. But also the stock market, like we said, a lot of these retailers, which are the engine of the market, is consumer spending, might get very weak. And we still don't know what's going to happen with the schools. Are schools going to open? Are parents going to be able to go back to work? Are they going to have to be out of work because the kids are home? So there's a lot of question marks, and that's why you're seeing a nice little pop in gold here. And I think it will continue. And, you know, sometimes they feed on itself. Gold gets to 2,000, and then the more buyers come in to take it to 2,500 at some point. So overall, I think the gold rush will continue.